So when you look at the backdrop, then, Ken, you're talking about monetary policy and all this stimulus going away, rates coming up to normal levels, and you're talking about fiscal policy coming into play, helping growth. You liked the tax plan last time we spoke, and
I like it.
And the backdrop, we're talking about 20% earnings growth, we're talking about 3 or 4% economic growth. You want to buy stocks in that environment, Ken, even if it means inflation and higher rates?
Yeah, because I think over a long period of time, there's no better harbor. Now, the other thing, Maria, is this, and this comes back to my current pet project. We've got to address entitlements in America. 71% of the money the government spends is on entitlements. We're not going to fix the excess spending in the government unless we address entitlement reform, and we're not going to address entitlement reform as long as these guys are up for re-election every couple of years or every 6 years. So this is why Bernie and I right now, for example, are getting ready to do whatever we can to hopefully persuade the American people to call for a constitutional convention for a constitutional amendment for term limits. I don't see any other way to get these people to do what they have or have the courage they need to have to get things done, other than to know that at some point they're going home, like it or not.
Right. Well, no, I think you make a good point. The last time I saw you, you said you're going to be focused, you and Bernie Marcus are going to be focused on term limits. You're going to put your energy behind it, your money behind it, to try to get people to understand why this is so important. Look, you're not going to see any change on entitlements during an election year, right? You got the 2018 midterms coming up. They're not going to take away anybody's Social Security before that.
Maria, I'll give you a slam dunk for them. What the hell is a guy like me doing, and my wife and I should say, getting a Social Security check every month? This is stupid. We won. We won big. We shouldn't get a nickel from our government. I argue that I'd be happy to pay higher taxes as long as the increased revenues were being put to a position where they're helping the government rein in its spending. But these guys are like, I mean, they're almost like drug addicts. As soon as they get their hands on some money, they're at it again. I mean, this current deal last night is what? A total of $300 billion in additional spending.
Right.
Who's going to pay for it?
Right.
And the money's got to come out of the debt market. The more money you borrow, the more demand there is for money, the more you're going to have to pay for money. It's supply and demand. So, look, I feel good about what they did last night, number one. Number two, I think the tax bill overall is a good bill. I'm especially pleased to see corporations, and I'm proud to say Home Depot included, and another company of mine, Unify, where we've decided we're going to share the goodies with our associates because we think we've got to do something about income inequality in America. It's a treacherous thing, and we've got to figure a way out to close that gap. So overall, Maria, I'm bullish. As I said, I feel better this morning than I did 2 weeks ago Friday night when the markets were hitting new highs and you're scratching your head and saying, why?
Yeah. Well, you talk about entitlements. Obviously, you know, you get a Social Security check and then you immediately give it away. I mean, not everybody does that, but you're giving it away. I'm sorry?
We give it to charity.
Exactly. I know you do.
Right.
So you're giving it away. That might not be the case for other people who don't need it and who are receiving it as well. So you make a really important point. But Ken, in terms of markets, are you expecting that volatility is back? That's it. We are going to see these wide swings up. You know, I mean, it could be 1,000-point swings all year. Is this what we're living with now?
I'm an investor. I'm a very long-term investor. I don't understand what the hell volatility is. I know that stocks go up and I know that stocks go down, and I know sometimes there are violent swings in either direction. I try to block out all the noise and stay focused on the fundamentals of the companies, on the business, on the management, certainly on what they're doing with their balance sheets. Are they being prudent? On dividends, I mean. So
where are the prudent balance sheets, Ken? Where's the growth right now? Where would you be placing some money today?
Well, right now, and I'm assuming, Maria, that rates are going to go up in an orderly fashion. I'm assuming the housing industry, we still have a shortage in housing supply in America. I'm assuming the housing industry is going to do well in the next 3 to 5 years, even with higher rates. And certainly I'm very, very comfortable with Home Depot and the moves they're making, especially the emphasis they're putting on online sales. Look, I think Amazon, frankly, is one of the best things that ever happened to Home Depot for the simple reason that Amazon has forced us to consider different alternatives for our customers other than coming into our store. So we're now offering. So I like that. I like the basic industries. I like if we're going to get an infrastructure bill, I love Caterpillar. I love Parker Hannifin. I love Emerson Electric. I love Illinois Tool, Deere and Company.
Yeah.
These are all companies. I love the banks, Maria. I think the banks are going to finally get some reasonable spreads in income on their interest. I mean, when rates were so low, it was a struggle to get a spread. Well, I'm very excited. I'm particularly excited about J.P. Morgan, Bank of America, Wells Fargo. I think these by the way, these banks are all in wonderful shape in terms of their balance sheets and in terms of their risk exposure.
Yeah, and by the way, they're coming into a period which is going to be real positive for the banks. You got higher interest rates, a good global backdrop with the economic growth, and of course a rollback in regulations. So
exactly. And by the way, that regulation in part was nuts. Okay,
right.
I mean, I'll give you for instance.
Right, go ahead.
J.P. Morgan lost $6 billion on some trading in London. What did our government do? They punished the J.P. Morgan stockholders $5 billion more because of the loss. Give me the logic in that. These poor people already lost $6 billion, so now you're making them lose $5 billion more.
Yeah, I mean, under President Obama, the Federal Registry went up to 95,000 pages. I mean, there you go. Ken Langone, always a pleasure, sir. Thanks so much.
Maria, have a nice weekend and say hi to John, please.
I will.